What's up, family? Jamie here. I am here today because I would like to journal some price action um, for my journal. And as you know, I like to put it on YouTube, uh, to potentially help other people. And so I have a link for my journal. So today is Wednesday, August 21st. We got 5C minutes today, and this right here should tell us that we need to have our head on a swivel. What does that mean? Well, it means that on days like this, you can see price action like this, like this, like this. It's not beautiful at all. It's beautiful once we get to the point where we're able to understand what's going on and trade it accordingly. But, you know, as ICT calls us neophytes, until we get to the level where we can really strategically trade this, it's okay to sit on the sidelines, tape read, and maintain your mental capital. And, I didn't trade today. I'm not trading today. And I feel really good. Like, because there were days like this where I would get wrecked. I would get completely wrecked and feel like this is not made for me. I can't do this. I don't know how to do this. I'm too stupid and all of that. But now, because I am practicing having mastery over myself, I don't have that experience on this particular day. Now, it's not to say that I won't have those kind of days in the future, but I'm just saying today, right now, your girl is feeling real good. All right, so I'm going to start on this daily chart. And one of the things that we were looking at where we had this reaction yesterday was off of this daily volume imbalance. So price pulled, hit just above 50%, probably even went to 75%, it looks like. Let's see, because ICT tells us that, what's going on here? ICT tells us that it can go to 25%. 75%, 50%. And look at that. Look at that. Look at that. That was yesterday. So, as a matter of fact, he reviewed this. Yeah. Well, there you go. He reviewed this and he was talking about, I think at some point he was looking for this portion up here to get filled in. So we got that today. And when price ran up here, what did it run into? Everybody, all at once. What is this right here? Say it with me now. Come on. You can do it. A rejection block. Whee! That is a rejection block. And that is on our wonderful, illustrious PD array matrix rejection block. Okay. So if you didn't have those on your chart, they're good to have on your chart. So we went up and hit a rejection block. But then the question is, like, what can you anticipate? So we opened here, we ran up through this volume imbalance, and then we hit the rejection block. And one of the things that I talk about, I meant to mark this in advance, so sorry, because I'm going to mark it here so we could see it, is what I see. And again, this is all hindsight. This is all tape reading. This is, what I understand that ICT teaches us. And I could be wrong, but this is just what I see right here. This right here, what is this? Everybody all at once. Give it to me. Accumulation. Right. Then when we see price shoot up like this right here, just out the blue, like, what are you doing? Where are you going? And why are you doing it to me? What is this right here? All at once, class. Manipulation. And then what we get right here? Come on. You can do it. Let's say it all at once together. Distribution. So that is AMD. This is the way I see it. This is what makes sense to me. And that's just what it is. You dig? All right. So that is AMD. So let me speak for myself. I want to get to the point where I am like sitting here and I understand we're in accumulation. Whenever we have a super manipulative move up like that, it's almost like the market tipping its hand to us that, look, I'm going up here and you're gonna get in where you can fit in or not. So it ran up there, manipulation, came to this rejection block. And then if we know that this, like really trust that this is going to be AMD, then it's just a matter of what is it going to give us a setup or some kind of entry to get in the trade and short it. And so right now it's like, going through these time frames, it's not giving anything. It's just the only thing that I see up here would be another what. I just went through this with you. I just did it. What do we have here? Everybody say it with me at once. A rejection block. Okay. So if we know that this is manipulation and we're just like, okay, we feel the volume imbalance. We took out previous day high. We're above midnight open. We're above all our key time levels. It's like, look for a short, especially when we see price come up here to this high time frame PD array, drop down and come back up, and it can't even break this high, let alone this high. It's telling us something. So, this could be an entry right here. Again, this is hindsight. I want to be to the point in my trading where I'm able to see when we come out of accumulation, we go into manipulation and we anticipate distribution. That's where I want to be on my trading journey. So you stay tuned on this channel and hopefully one of these days I'll be like, I did it, y'all. So there you go. It came into the rejection block, but just even going down to the sub 1 minute, like even here, it didn't even come up to this order block. It came into this order block. And right here, we would have to be like, let's see if I got one order block. Let's do this right here. And let's do it like this. Like once we created this order block right here, and then had this displacement, then maybe you'd be like, okay, let me see, and I'll get in at 50%, and then put your stop up here at the high. Like that would have been a great trade. That's the 30-second chart. Let's look at the 15-second. Same deal. Even here on this order block, we couldn't even get up to it. We gonna do? What we gonna do? Right here. See that right there? Couldn't even get into it. So, we got that. Now, I am not gonna even act like I would see this and that I would trade it, but it's always possible. Keep in mind, this is a 15-second chart. This right here. Oh, it didn't even hit it. So there you go. This is a inversion fair value gap. Yeah. Well, that's a bearish fair. That's tricky. I'm gonna leave that one alone because really it was a bearish fair value gap, and the bearish fair value gap got violated and price came back through it. So I don't think it turns it into an inversion, because usually we would see like a bullish fair value gap that turned it into an inversion, if we were going short. So I'll let that be. Maybe right here you could see that you got this volume imbalance. So when price gaps down here, if you can catch it, when it pulls back up here and creates that wick. But that's as far as I'll go on the 5-minute chart. So, ideally we can catch a trade, catch that short, catch that big, huge move down. How many points was this? How many points was this down here? Then I'm going to show you something else. Check this out. All right, so let's just say we did get in here. Oh, what's that? Let's just say we did get in on that rejection block up there. And it would have been scary, no doubt about it. And say we took it down here. Let's not get real crazy to low-hanging fruit. No, you know what? we could take it to the new week. We could take it. I think this was yesterday. No, this was today's new day opening gap. Let's just say we took it down there. Boom. Bye. All right. So then you're like, okay, we ran down and we came down to that new day opening gap. Let's just see if there's any other liquidity over here. You know, we got these lows over here, but really I believe that the draw was the new day opening gap. So then you got that, and then you're like, okay, are we going to run up again? And a lot of times what we'll see is that price will simply retrace into up to equilibrium of the range that we just created. Boom, right? Chia, right? Look at that. Look at that. Would you look at that? It's so beautiful. So for me, I want to be like, so there are times where like it'll create a little liquidity void, fill a liquidity void, create a liquidity void, fill a liquidity void. But when you see something like this right here, reacting off of equilibrium of this range, it's almost letting us know that it wants to go lower. So then it's just a matter of, can you find a entry that'll take you down to that, at least down here. And then maybe if you had, let's see if there's another draw on liquidity down here. So at least here, it didn't take out this low right here. So we went up, let me see, 50%. And then we came down. Let me just mark this real quick. Let me mark this right, Sean. So let's mark this and just see when this was taken. This is sell side liquidity. This is sell side liquidity. Then we have this sell side liquidity. And we have our old hourly fair value gap that I showed in one of my videos from yesterday. So let's just see, when we had this retracement up to equilibrium, it ended up coming down to not only take out the low that we put in here, but it ran this sell side liquidity down here. So it's like, it's plausible that you would have that on your chart and just take that as a target, or at least new week opening gap. But regardless, that's a great trade. So if you believe that, and you trust that we have these retracements up to equilibrium to continue down, then it's just a matter of it respecting bearish PD arrays until it makes its way down. So you got this order block here, came into it here, dropped, created this little block right here, came into it here, dropped, created this little order block here, came to it here, dropped, created this order block right here, came into it here, dropped, order block, dropped, order block, dropped, and then you just get gone, girl, order block, came into it, drop, 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 drop. Then once it's taking this down here, you're like, okay, I'm done. But then you ask yourself, okay, well, what's the entry to get me up to equilibrium? Well, after we, had that distribution and we took, this liquidity here, had this strong reaction off of the new day opening gap, then you got this little ditty right here. What's this right here, everybody? Say it along with me, please. Just say it along with me. Pause your charts. Yeah. Pause it so you can find it. We got a bipper, aka BPR. BPR entry. This right here is a what? What is this right here? What? Say it along with me. Say it. What is this? I don't even have a, oh, do I? I do. Ha, there you go. It's a breaker. So in this case, all of these up close candles are the breaker, but ICT teaches us that the most sensitive is the one at the top and then the open here. So all we did, what did we do? What did we do? Did we do it or did we do it? 50% of the breaker wick. Oh, and a BPR. Y'all. And then you have to understand that this is not gonna retrace and just go, fly up. It just retraced up to equilibrium. And we can presume that because we came here and reacted here and left this liquidity here, that it's going to come back down for it. And that's what it did. That's what it did. So even if we got in short up here and we had these targets down here, if we allow for 50% retracement, then we can get to our target. But a lot of times people be like, oh yeah, I'm up $5,000. I don't want to be down $2,500 because I was here for a retracement. But that's the name of the game. And some of our funded accounts wouldn't tolerate that anyway. Up here in confluence with this retracement is also, what do we got? Again, what is that? Say it with me. Pause your charts. Pause the video. It's another BPR. So that has confluence with your equilibrium here. Absolutely beautiful. So I know days like this are very difficult. You're like, oh my God, I don't know what's happening. What in the world is going on? But it's like when we understand what we're looking at and we can go back in the charts and kind of read it and try to decipher it, you might find that it's actually very beautiful. And then here, like after taking this sell side over here, what is this 1 minute chart? It's like this is an inversion fair value gap. It didn't give you an entry. We got a displacement above this little short-term high right here. So because we've run all that liquidity, we've done the retracement back up to equilibrium, we came down, blah blah blah, displaced above the new day opening gap, like right there could be an entry, putting your stop down here. And if you really believe that price is really ready to turn around, then as soon as you get your change in state of delivery here, but really you might want to wait for this one because this is a larger down close candle. So you might want to wait for a change in state of delivery on this candle right here, and then use that in confluence with this fair value gap right here. And then because of a day like today, you might want to be targeting low-hanging fruit. So you get in here and get out here, or get out here, relative equal highs, clean highs, get out up here or up here. Or, we'll see how we end up today. Maybe we'll just end up filling this nice, beautiful liquidity void. But that's all I got. I'm going to put this in my journal. This is the week of Jackson Hole. ICT has warned us that, it can be a wacky week. It can trade like NFP. So again, just be careful out here on the streets. Use this calendar to your advantage. Don't be so pressed to get in the trade. It's okay to sit back and tape read, take screenshots of your chart, analyze what you've seen, and live to trade another day. Watch how we let's watch well, obviously I'm not going to do it in this video, but see how it's coming down and respecting this new day opening gap. And I got to be careful because I have multiple gaps on here, and this one is yesterday's, because today is the 21st. I don't have my let's see. Oh, I'm supposed to put my days there. But this is from the 20th to the 21st. So that's today's new day opening gap. So it's amazing. It's amazing. It's amazing. That's all I can say. So now we're at yesterday's new day opening gap. So we'll see. Just keep on watching it and see how it looks once the day is complete. If it finally gets up above it. Okay, that's it. Good job, Jamie. Love you so much. Have a good day, and be cool. Always stay in trading school. Bye. Bye. Bye.